Welcome to TradeTheMBI.com. This is John's reports for the 24th of April. Well, we approached right up to the 50% and rejected firmly off that. Of course, the trade war is still continuing, and it's this whole talking head situation. Treasury Secretary is trying to make his, calming remarks towards the market to see if they'll accommodate it. But in between that, the U.S. collected a record 12 billion in a day as far as tariffs and that adds up. It won't be that consistently, but what we do see is the turnaround here and the shakeout, and that was critical. Do you have enough to push over the 50% if you're able to get back up there? Yeah, at this particular stage you do. We do have rising short interest at this particular case, but magenta is still over yellow now, and blue just crossing here. So those are the areas that you look for. Now, that doesn't mean you're not going to get back and forth within it because it's still pretty close and there isn't a strong reset separation, but likely to plug away within continuation. But if we're able to get up to that 50%, there's a good possibility that it could break through if you can get further improvement. I wouldn't expect to see any kind of breakout until you get a positive shakeout reading. And as you can see, we haven't had one of those since, well, January. So that just lets you know the market expressing itself, not liking the direction of confrontation, so to speak. And it's not even that, it's just they don't want to take away the free gravy train they were getting because from all their foreign sales, they were just taking advantage of this. And a lot of it's already been wiped out anyway because of the changes in dollar, at least when we look at the euro and stuff from the NQ standpoint, slightly weaker. Just that it didn't reach the 50% similar move, but has already faded back from there. And, this is the whole negotiation thing. And of course, like I've said to you, they would always overreact to it. Not a surprise, and doing exactly that. But they would be able to play all that weakness in between, and it just shuffles away the weak hands, so to speak. From a Treasury standpoint, it was quite a move, and then all the way. So this is that uncertainty without the Fed cooperating at all. Makes things much more difficult. It'd be a lot easier if there was in sync behavior from the Fed. But a lot of it depends on this one, oil. So we had a little spike continuing up above, but traded back lower, and that it's not enough. Now you're in the right configuration from a reading standpoint, but you really got to see a pretty good sized trade off to the downside. So everyone's going to be watching crude inventory builds and which sectors. But this is the weird thing about it because, like I said, there are going to be certain states that are going to benefit from the situation. Others not so much. So you're going to have a little bit of disparity in how you see this play out economically. From a euro standpoint, of course, traded off a little bit, but it's already gaining back all of that one. Then again, the eurozone still having to commit to the war. Russia making a lot of conciliatory remarks, but still winning on the ground. I don't know what Ukraine expects to do with that, but it is what it is, and they're going to continue to go back and forth on it. But gold going to still continue to push. Right now, we're in a little bit of a weak stage, but as soon as it turns around, you're going to be pushing back up to the highs. Of course, it assumes that it does, but you can still see cyan in the red has been so clean for all this, and the dip below here on the negative 13. Once it gets back above, that will be a stronger move to the upside from it. And Bitcoin, of course, still solid rally within it. It had just reached its basing point, and now it's becoming a more active role for that intra-trade that I like to think of, where you're just parking in between trades and coming back into it. ETH not experiencing quite the same joy from it. So it's pretty funny from here. Gap up was the buy, shot all the way up. It was all pretty clean with cyan and the red. Then DOC spread took place with cyan coming over the red right there. At the same time, you'd already had magenta under yellow and fading, and it was just a little bit slower. There wasn't as much strength in the short activity. That's picked up a bit. So we could see a move that comes back to the 50%, which would fill the gap up. Not a big deal. All pretty clean there from that standpoint. And when we look at it from the intraday, so there was a lot of excitement, and then comments came through when the market decided to sell into those. So all the call buying got wiped out. Then the put buyers jumped back in. They got squeezed a little bit later on in the day, but not that bad. Overall, like I said, this was a bullish move within a broader bear market, as we talked about on the Skype chat. Nothing's changed. Same things happened countless times, 2007, 8, everything, even when things were difficult. You still had huge rallies with huge sell offs. The volatility of this is just the active willingness of the participants to actually, say things publicly. So it's much more dynamic, that's for sure. Uh, but anyway, the European session at this particular stage, pretty good weakness at this particular point. They're starting to try and make a little bit of a comeback, but I would expect more back and forth of the same. And it's going to, again, reflect on conversations. And that's just the market moving at whim. So a little bit different than normal. As always, anything relevant up on the Skype chat. Have a good one. Trade well.